This conversation is happening off the heels of President Trump directing Secretary Scott Bessent to cut off all trade with Spain over issues of use with air bases when it comes to the attack on Iran. I would love to just get your initial reaction to that.
So it's great to be here. Extraordinary times. You know, extraordinary times, you have to look to the medium term. Spain and the United States have had amazing relationship forever, you know, centuries, and I'm sure that's going to happen again very soon. So Santander, on the other side, we are a big investor in the United States. We see ourselves as a bridge between the United States and Latin America and Europe and the United States. So we will focus on serving our customers. We have close to 5 million Americans that we serve every day. So, you know, this is a great country and we're investing more.
Are you concerned about any greater impact when it comes to either Spain or Santander itself? If this is what happens, if there is trade cut off, how big of a ramification could that have?
So at the end, we're here to serve our customers. And if our customers need our support, you know, that's what we're here for. So, you know, we are a great connector. Trade is one of our big activities. We're one of the big trade finance banks in the world. And again, what we see is that the trade continues and is very strong, and that's the numbers. So there is still a lot of connection, increasing connection between our countries.
So you're confident on the relationship between the U.S. and Spain, between Santander and the U.S., regardless of what the headlines are? Is that fair to say?
Yes. You know, the long-term relationship is strong, and I think that's where you go back to, again, we're living very extraordinary times.
Can I ask, because you also did a deal recently, announced you were buying Webster in the U.S. Given some of the political volatility, how do you think about your regulatory outlook? Are you concerned that that might come under greater scrutiny if there are relationships fraying?
So at the end of the day, our business model is perfect for what's going on in terms of fragmentation. So we invest in the countries where we operate. We have subsidiaries. We bring a lot of capital. That is exactly what, you know, countries are looking for right now. So we don't operate from one country into another. We actually invest, and we have physical presence with employing thousands of people. So our model is very well suited for today's more fragmented world.
Just one final point on sort of some of this dislocation we're seeing, because a lot of this obviously came up after war broke out in Iran. How are you thinking about your Middle Eastern presence and how that might affect Santander?
We have a very limited Middle Eastern presence. We're basically one of the largest banks in the world by number of customers, 180 million in Europe and the Americas. And as we see the situation today, clearly there's a risk that growth will slow down if this goes on for, you know, months. But our presence right now across the Americas will be, I think, least affected than almost any other part of the world. So again, slower growth potentially, but for Santander, actually, our footprint is in the least affected regions.
Are you thinking about inflation at all as a potential risk?
Absolutely, yes. I think inflation is a risk. Stagflation at the end is the risk we're facing if this lasts. But it's very early days. We don't know.
It is very early days. So let's talk about what we do know.
Yes.
And what we do know is that you've been very active on the deals front. I mentioned Webster, again, an American bank. For that deal, can I just ask what the thinking behind it was? Why that bank and why do it now?
So Webster was the third step in a very, you know, well-planned process of refocusing Santander's footprint. So we sold Poland about a year ago. You know, we reallocated that capital partly to shareholders, then partly to the UK, and then the US. Webster is a great bank. It's in our footprint. It has a team that is very, you know, experienced, one of the best managed banks in the regional space, and strategically and financially, it's a perfect fit for Santander. You know, strategic front, they are a commercial bank. We're more consumer. It gives us scale in the Northeast, so we become one of the top players in the Northeast with 8% market share. It gives us also the opportunity, actually, to improve our funding. So all of that with very strong financial returns. You know, we take the Santander US from currently 10% to 18% return on tangible equity. Ultimately, our goal is to be one of the more profitable banks. 18% in the US puts it at the top of the largest banks in the United States. And for shareholders, a return on invested capital of 15%. So again, very attractive strategically, financially, a great bank, great leadership team. We're very happy.
It's interesting you talk about how this expands your profitability footprint, because a lot of people look at banking consolidation, say it's always a play for scale. You just need to be big. You need to be another JP Morgan to plant your flag in the ground. How do you view this issue of scale? And if that's the important, if that should be the driving factor between M&A when it comes to financials?
Scale matters. That's why I always say we bring our global scale to benefit our in-market scale. You need a certain in-market scale. The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom. In that part of the United States, we will be a strong competitor. 8% market share matters. When you add our global scale, our global platforms, that is what takes you to the 18% profitability. And this is really important. Today's technology, and we're now using more and more AI and our global platforms, is a unique advantage. Again, we're at scale. Our investment in tech would be the third or fourth largest among US banks. So, we have a global scale, and that is what allows us to bring that to benefit our regional bank.
How are you thinking about next steps on this deal? For example, would you merge Webster into Santander? Would you put the Santander branding on that? How do you think about the combination?
So one thing is the legal merger. Yes, absolutely. It would be a single bank. So we're merging our auto operation, Santander Bank and Webster. That would be a single business. In terms of brand, we're going to keep the Webster brand for now. We think it's very strong in its community. And so we're going to wait until we have done the integration. We will keep a large office in Stamford, Connecticut. And John Ciulla will be part of our board and will be leading the integration.
I should note, it's not just this. You've been active elsewhere, TSB, a Polish deal as well. There's been a lot of talk about banking M&A. You're not talking, you're actually doing it. What's happening that's different at Santander that's allowing you to execute on some of this?
So as I said, Webster was the third step in a very planned focus to really redo our footprint with a very clear aim. Today, we have 80% of all our loans are in hard currency, dollars, sterling, and euros. And importantly, this gets us to the over 20% ROTE at the group level. That is among the most profitable banks in the world. So again, a very planned strategy. Once you have that, then you say, okay, what do I want to do? And so I always say, you sell when somebody wants to buy, and you buy when somebody wants to sell. I believe in relationships. And so, again, our Polish bank was sold in a one-to-one negotiation to a much better owner than us. They have more network effects. TSB was the consequence of something else happening and being there ready at the time. And Webster, regional banks were looking to, do M&A. We had a relationship with John Ciulla for some years, and we were there when they decided they wanted to, sell.
What about M&A more broadly, Anna? Because at this moment, we came into 2025 saying this was the year of M&A, and then April 2nd happens. We come into 2026 and say this is the year of M&A, and then we get war, AI, credit fears, trade disruptions. Is 2026 still more broadly the year of M&A?
So depends how you think about M&A. So what we've done is what we call bolt-on acquisitions. So it's not big for us. So if you think of Webster, that's 4% of our group assets, 7% of our market cap. So it's strategically important, but it allows us to continue with our financial commitments and shareholder buybacks and so on. So that M&A, I think, is very value accretive. Again, Webster will add 9% to our earnings per share, and it's very different from transformational M&A. That is what I think is going to be harder, because of regulation, because you have certain requirements in terms of capital when you do big transactions that make it less interesting. And to be honest, that's how we started the conversation. There's also, my country comes first, and it's important that, whatever happens is directly benefiting my consumers. And again, our type of M&A ticks all those boxes, right? And so that's why I think it's happening, and it's also our way of doing business.
One of the kind of greater fears that maybe is holding back M&A is also credit markets too. I would love to give you a chance also just to respond some fears over MFS rather. What exactly does Santander's exposure look like? How are you thinking about that situation?
So, Jamie mentioned cockroaches. I think of this as jellyfish on a beach. I come from northern Spain, and every summer when the jellyfish, you see the jellyfish on the beach, you still go in the water. You're just very careful. And we have been very careful for years, right? We have been on a risk-off for the last couple of years. We're very careful. Obviously, there's going to be sometimes you get stung a bit, but when you're careful, it doesn't matter. You can still swim, right? And so, that's how I feel about what's going on.
By the way, I love that metaphor. If I can torture it a little bit.
Yes.
Do you put on some life rafts? Do you swim more carefully? Does any of your behavior change?
Of course. Absolutely, it changes. So again, if you're going to the beach in the summer, you want to swim, right? Like if I have a business, I have to continue doing mortgages. Sometimes I'm going to give a loan that doesn't work out. The question is how much and how you address and how, again, you don't go out and just like go in the sea like wherever. No, you're very careful. You do put some protection sometimes, and that is what we do. And that is how we think about the current situation.
So is due diligence ramped up a little bit then?
Totally. And, I always say you have a range of, operating range, right? And so, for example, on capital, we said 12 to 13. We're at the 13. So we're operating at a higher level of capital than if the world were not so complicated, right? And so there will be things happening. What can I say about what's going on? And so that's why, that's how we've been managing the bank for the last couple of years. If you look at our Investor Day, it's all about changing the model and being more efficient. We have told the market we're going to go to a cost income of 36%, reducing absolute cost on a 3-year basis from 28.5 billion to 27. So we're very focused on what we can control. In an environment that is so uncertain, focusing on what you can control is essential. And that's why the market liked our plan, because, it's not we are going to grow. By the way, we're going to grow 30 million customers, but we're not growing our balance sheet or our risk in a significant way.
One of the reasons I loved your Investor Day is you yourself are a technophile.
I love it. Yes, I set up a tech company in the year 2000. And my thing is tech and AI, and I think that is the way to go for any company in any sector.
How big of a transformation are we talking about? Maybe not even just Santander, but the world with AI. How are you thinking about this opportunity set right now?
It's huge. It's huge. The way I think of it at Santander is responsible AI by design, right? So trust is everything in banking. And the accountability, the transparency, the governance, that's what we've been working on for the last couple of years. Now, AI is embedded in our operating model. That is why we went at Investor Day and said, we're going to deliver 1 billion in the next 3 years, 700 in efficiencies and 300 in revenues. We measure how many tokens we power, right? And so in the next year, the next 12 months, we're going to multiply by 5. We'll be at 6-7 trillion tokens. That is a significant number. But what matters most is what you're doing with that AI. And again, we have put numbers behind that. And I would say 2026 is the year when we scale all the AI initiatives across the group.
Just quickly, does that change headcount at all, or does that stay steady or grow?
When you reduce cost, obviously headcount is affected. But there's a lot of, different skills, and so we're still hiring, but obviously, on a net basis, yes, there will be less people.